The Kenyan market ended on the up, gaining about 48 points, but we did see a bit of a sell-off, much like yesterday. Which stocks were under pressure today?
Thanks a lot. Today we saw a lot of sell pressure from both sides, both local and foreign investors. One of the culprits, let me use that word, was Uchumi shares. The stock has come under a barrage of selling pressure since relisting, and this is mainly due to debenture holders trying to cash in, from their discount positions that they got in. Yeah. So again, you look at a host of issues that are affecting the market. You look at the local investors; they're still on the hold position, and most of them come in the market once in a while to book gains. And basically, this is basically informed by the fact that look at the T-bill environment, the short-term T-bills, the environment, it's on a high yield environment, and just how much this will go up, the jury is still out. And tomorrow we see the finance minister read out his budget expenditure estimate for the next financial year, and we expect it's a huge one, 1.2 trillion Kenya shillings. You look at the Revenue Authority missing targets, we still expect a huge deficit, and that will inform the fact that the Central Bank of Kenya will still try to deepen the debt market. It's still coming the market to pick a lot of money. And actually, if you look at the government, they're really not much they don't have much options. One of the options they have at their disposal is they have an option to raise taxes, especially the VAT. They also have an option to deepen the debt market through the Central Bank of Kenya, come on the market, borrow so much money, because you have a huge gap, and that you have to finance one way or the other. So it's a bit of, we're still seeing the yield environment going up. And now what this means for the equity market is that we shall see it will still trade on high volatility, and you might see a lot of local investors trying to play short term, come in the market just a quarter, 3 months, book their gains, get out, yeah.
Talking about the budget tomorrow, we know that the construction sector is set to benefit, given that the infrastructure spending is likely to get a bigger chunk of this budget. How have construction stocks reacted to this?
The jury is still out, basically. Although that should be good news for the the three listed cement manufacturers. The government, obviously we expect a huge allocation for infrastructure. This is the launch pad for the economy. You have to build the infrastructure. So, becoming industry dynamics, last year we basically saw, the demand and supply equilibrate, basically. You could not say there was a glut or a shortage per se, but it was at par. This year we still expect, actually demand to slightly outstrip supply, because one, we expect a huge allocation from the budget towards infrastructure development, and then two, you have these new entrants coming to the market and trying to boost capacity, and even the existing manufacturers, they are doing a lot to enhance the production. You've got this, the Athi River, the Bamburi, they're trying to expand to other regions, just try to boost their production and utilization, and we expect demand and supply to largely equilibrate, So towards the market, the market response to this has been a bit tepid, I think most investors have taken that account. So, plus you look at them, or look at all the three, there are also other dynamics. If I look at Portland and Bamburi, from my viewpoint, you still have issues with the liquidity around them, and they're not really that much liquid. And if the companies can do something to boost their liquidity, we might see a lot of heightened activity around them.
George, I just want to touch a bit on the currency. It hit another all-time low against the dollar today. What is actually driving this weakness?
this is my verdict on the shilling. It's not sensitive to the fundamentals. The shilling should be following the fundamentals. And what I mean by this is that if you look at the MPC's last week meeting, they hiked the rate by 25 BPS. Obviously, I expected a 50 BPS rate hike, but they did 25 BPS rate hike. You look at other currencies, the response to a rate hike is overwhelming. The shilling should be following the rate hike. It should be actually appreciating versus the dollar. And from an interest rate perspective, if you raise the rates, it should be attractive as an investment grade, as an asset class. It should be very attractive. And the shilling is defying fundamentals. And now you're looking at the central bank tightening liquidity, of course, boosting its euro portfolio. You also have banks here, major players trying to play around the shilling. So it's really not a good thing for the shilling to hit the level we saw today. And I think at some point, the central bank, they have to say, hey, on an intervention policy, we've got to break it, intervene, set a cap for the shilling, because at this rate, who knows? Technical charts might show that the shilling might even just be approaching 90.
All right.
And this is not good. Yeah.